Hello aspirants, very warm welcome to Skholar.com. This is your faculty Rohan Dange. I'm here to discuss 10th class NCERT with you. So we have discussed almost more than half of the 10th class NCERT till now, and I would be focusing on more such topics. In the last lecture, which was lecture number 4, we talked about money and credit. We shall be focusing more on money and credit in this lecture. In fact, I have broken this lecture, money and credit, in 3 parts. This is part number 2. So I welcome you again to Skholar.com for another fruitful discussion on money and credit. So without wasting any more time, let's begin. So this is money and credit part 2. So as you can see on your screens, there are two different credit situations. First is the festival season. See, dekho, in India during the festival season, what you see is that there is a lot of demand for money, right? Like right now we are in a festival season, correct? So basically what you see is that from say suppose September, in which you have the Ganpati festival, then all up until January or February, in which you have some more festivals like Sankrant, right? So all over India there are festivals like Ganpati, Navratri, Durga Puja, of course Diwali, Dashera, New Year's, Christmas, Eid, Sankrant, and if I'm not wrong, Onam and Pongal as well, if I'm not wrong. So majority of the festivals do occur in this 5 month span. And in India, festival is a big affair. It is celebrated with much fanfare. So obviously the requirement for money is also very, very huge, right? And since the requirement for money is huge, a lot of credit is required, because obviously people who are salaried class or people who survive on wages would not have a lot of money to spend or would not have a lot of money at their disposal. Also, let me tell you that it is during this season there are a lot of marriages or a lot of weddings which happen, right? Now wedding is a big business in India, and a lot of expenditure is envisaged in any wedding. So of course the festive season which coincides with the wedding season means that a lot of what you can say expenditure will be done, and therefore the requirement for credit is also very high, right? So it is a festival seasons. What happens is that it is a festival season. Basically NCERT has given a case study here. Okay, so let's take a look at this case study. So it is festival season 2 months from now, and the shoe manufacturer Salim, he has received an order from a large trader in town for 3,000 pairs of shoes to be delivered in a month's time. To complete production on time, Salim has to hire a few more workers for stitching and pasting work. So he has to purchase the raw materials. To meet these expenses, Salim obtains loans from two sources. देखिए अब क्या हो रहा है कि there are more people who are now entering the job market also, because the production has to reach an all-time high. On the other hand, the requirement for raw materials is also very huge. So now a virtuous cycle is triggered in the economy, right? Or a positive cycle is triggered in the economy. Because the demand is high, the supply has to match the demand. For the supply to match the demand, production has to be high. For the production to be high, more people have to be employed, right? More raw material has to be purchased. So obviously there is more expenditure. And business is an interlinking process. There are interlinkages in various businesses. So what we see is that there is a huge requirement for loan for paying the bills on raw materials or for paying the salaries. So Salim, he asks the leather supplier to supply leather now and promises to pay him later. This is also some kind of credit, right? मैं आज आपसे कोई चीज खरीद रहा हूं और मैं कह रहा हूं कि यार I'll be paying for the same thing later. What does this tell you? This tells you that Salim is perhaps in requirement of more money, right? And therefore right now since but he cannot stop down his supply, and therefore he cannot compromise on the supply, and therefore he takes a credit from the leather supply. Second, he obtains loan in cash from the large trader as advance payment for 1,000 pairs of shoes, with a promise to deliver the whole order by the end of the month, right? So यहाँ पे भी he is taking a loan in cash from a large trader, right? So basically what he's doing that he is taking an advance payment from for 1,000 pairs of shoes. When do you take a payment? When you already have sold off the thing. But if you have not sold off a thing, how can you take an advance payment? But Salim is taking an advance payment because obviously this is the festival season and the order needs to be fulfilled. The order, he has committed to the order, right? So, and he has also promised to deliver the whole order by the end of the month. So then he doesn't have to pay back the loan. He just have to supply the shoes, right? And fortunately, because of the festival season, Salim at the end of the month is able to deliver the order and make a good profit and repay the money that he had borrowed. Right. So this is how the cycle of credit functions, especially in a festival season. Right. You take credit right across the value chains and then you fulfill the orders, make profits, and pay off any loans or debt that you have. Right. So this was the first type of credit situation. Let's take a look at the second type of credit situation. In this, we are looking at Swapna's case study, right? So let's take a look at that. Swapna, a small farmer, grows groundnut on her 3 acres of land. Okay. She takes a loan from the moneylender to meet the expenses of cultivation, hoping that the harvest would help repay the loan. ठीक है, जो एग्रीकल्चरल प्रोड्यूस होगा, जो ग्राउंडनट आएगा, उसे बेच के she hopes to make a profit and she hopes to repay the loan. But midway through the crop season, the crop is hit by pests and the crop fails. I hope you know what are pests, right? So pests are basically detrimental to any agricultural yield. So the crop is hit by the pests and the crop fails. Now see, though Swapna sprays her crops with expensive pesticides, it makes little difference, right? Because now the time is gone, the crop has already failed, and unfortunately she has taken a loan from the moneylender to meet the expenses of cultivation, right? So now she is going to be unable to repay the moneylender and the debt will grow over the year into a large amount because interest will pile up, and this piling up of interest is going to be detrimental to Swapna's chances of making money and repaying the loan, right? And next year Swapna will take a fresh loan for cultivation because obviously next year also she wants to cultivate. So now this will be a loan on loan, right? So it is a normal crop this year, but the earnings are not enough to cover the old loan, correct? So she is caught in a debt. So this is called as a debt trap. Why? Because she has to take a debt to repay the debt from last year, right? Now, to service this debt, what do you understand by servicing the debt? Servicing the debt basically means that whatever loan you have taken, you should be able to pay the interest and the principal amount on that. So for servicing the debt of the last year, she takes another debt. Okay. But is it possible every time? No. And therefore, finally, she has to sell a part of her land to pay off the debt. So now land's ownership will be transferred from Swapna to the moneylender, right? So हमने दोनों cases में देखा that see in one situation credit helps to increase the earnings and therefore the person is better off than before, and in another situation because of the crop failure credit pushes the person into a debt trap, right? So जैसे स्वप्ना का इशू हमने डेट ट्रैप देख लिया एंड सलीम के सिचुएशन में हमने देखा दैट द पर्सन इज बेटर ऑफ देन बिफोर, right? So credit situation can lead to a positive scenario, can lead to a negative scenario, and that also depends on externalities. If the externalities are negative, then the outcome is going to be negative. If the externalities are positive, then the outcome is going to be positive, right? Anyways, so moving forward, there's a thing called as terms of credit. Okay, now let us understand what is terms of credit. Every loan agreement specifies an interest rate which the borrower must pay to the lender along with the repayment of the principal, correct? So in addition, lenders may demand collateral. मैंने security की बात की थी पिछले कुछ lectures में. So you have to actually offer a security or a collateral against loans. Now what is a collateral? Collateral is an asset that the borrower owns, such as land, building, vehicle, livestock, deposit with banks, and then he uses this as a guarantee to the lender until the loan is repaid, right? So basically, if you default on the loan, then the banker or the bank can appropriate that particular collateral and can liquidate that security to recover the loan, right? In case of a default, right? In case there is no default, then the collateral will be given back after the complete repayment of the debt, correct? Now, if the borrower fails to repay the loan, the lender has the right to sell the asset or collateral to obtain payment. If the borrower fails to repay the loan, the lender has the right to sell the asset or collateral to obtain payment, right? We have already discussed this. Now, property such as land titles, deposits with banks, livestock are some common examples for collateral which is used for borrowing. जैसे आपको एजुकेशन लोन लेना होता है, so what do? You go to a bank to apply for the education loan, and what do you get in return? You get in return is or rather, when you get a loan, you have to also pledge something against that loan, like for example your property, for example your agricultural land. You have to pledge that. So property such as land titles, deposits which you already have with the banks, livestock, any cattle or milch animals that you have, these are some of the common examples which are used as collateral while borrowing money from the banks, right? Now, interest rate, collateral and documentation requirement and the mode of repayment together comprise what is called as terms of credit. Okay, so in prelims, what kind of question they can ask? They can ask you which of the following qualify as terms of credit. So what is the answer to that? Interest rate, collateral and documentation requirement and the mode of repayment together comprise what is called as terms of credit. Okay, so moving on, let's talk about the formal sector credit in India. Now, obviously, as you can see from the pie chart, what you can make from this is that money lender has the highest proportion of giving out loans in India. So, in spite of a formal credit structure which is available, it is the money lender who lends the most in the country. Most of that activity is happening in rural areas, right? You see that cooperative society and banks also lend almost 1/4 in India, and commercial banks also lend 1/4. So if I talk about cooperative society and banks and commercial banks together, they lend 50%, right? Government lends 1%, and other institutional agencies, they also lend 5%, right? So if I talk about formal credit in India, what will that include? Government, cooperative society and banks, other institutional agencies, and commercial banks, right? So together that accounts for 56% of lending, 56% of formal sector lending, formal sector lending or formal sector credit. Okay, so what we see is that there are various types of loans and they can be conveniently grouped as formal sector loans and informal sector loans. If you talk about the formal sector loans, you're talking about banks and cooperatives, right? And informal sectors could be any, could be a money lender, could be a trader, could be an employer, right? आप जहाँ पे काम करो वही आपको लोन दे रहा है, relatives, friends, okay? So the Reserve Bank of India, it supervises the functioning of formal sources of loans, right? Now there is no organization which supervises the credit activities of the lender in the informal sector. देखिए formal sector में who is the regulator? RBI. RBI has two acts. The RBI Act of 1934 and there is another act which goes by the title Banking Regulation Act 1949. Under the provisions of these two acts, the Reserve Bank of India actually regulates and supervises the formal banking structure in India. Okay. But when you talk about informal lending, is there a regulator? No. So देखिए, whenever there is no regulator, not just in banking, in any other sector, exploitation is very much possible, right? So any lending organization which is regulated by RBI will never be able to exploit the borrower. will never be able to charge exorbitant amounts of interest on the principal. But if you are talking about informal sector, then any amount of interest could be charged from you. And also there is no regulation which would concomitantly mean that there is a possibility of exploitation. There is a possibility of also using unfair means, right, for the repayment of loans, right? There could be a use of physical force also. Now, therefore, to avoid these activities or to avoid such scenario, it is imperative that the banks and the cooperatives lend more, because if the banks and the cooperatives they start lending more, then people's reliance on the informal sector of the economy will be less, and this would lead to higher incomes, and many people could borrow cheaply for a variety of needs. So they could grow crops, they could do business, they could set up small scale industries also, if loans are available, if credit is available, and that would again set up a virtuous cycle in economy, as I have discussed with you, right? Once formal sector extension is done for the people, people could also set up new industries, and people could also trade in goods. So cheap and affordable credit is crucial for countries' development. Cheap and affordable credit. That means low interest rates. Who can offer low interest rates? It is the cooperative society, cooperative banks, and the commercial banks. Right? So when cheap and affordable credit is available, then people from all strata of the society can borrow from the formal banking structure, which would lead to a more productive economy, right? So this is what you understand by formal sector credit in India. And with this, we have come to the end of this lecture. In the next lecture, we will be talking about more such aspects and more such scenarios regarding money and credit in India. So till the time we meet next, this is Rohan Dange signing off from scholar.com. Thank you very much. Keep practicing social distancing. Take care.